easy investing and good returns are just the two of the many benefits that mutual fund investing offers you and what has made them so popular as they are today. But do we really know the reasons why they are so popular? Have you capitalized them on those reasons for your advantage? Have you made them benefit you on your investments? We consistently seek avenues that offers growth and security. The appeal of mutual fund investing has strengthened and it has presented us with the opportunity to meet our goals with a respectable, tolerable amount of risk that we can afford to take. From the potential of substantial returns to the expert management of diversified assets, there are some distinct advantages that investing in mutual funds can only give us. This video focuses on investing in mutual funds and how to make the best use of them for your advantage. आपको क्या लगा? पता नहीं होगा तो भी चलेगा? Ignorance is bliss. No! Ignorance is not bliss. You're putting in your hard-earned money. Your hard-earned money is at stake. You cannot take it lightly. You cannot take it for granted, can you? That's a wrong philosophy. Ignorance is not bliss. You've got to be careful with your money. Every step you take in the financial world is a challenge. And with it, often comes the next big opportunity. This video will give you an insight, but the next video I post can bring you that next big opportunity. So like this video and subscribe to this channel right now because you don't want to miss that opportunity. Do you?
Open eye, feel the waves cut through me, hypnotized by the sounds I'm breathing in. Hold tight, chemicals collide. Hold tight, hold tight, hold tight.
Number 1, the management. Mutual fund investing has made it easier for us with their team of expert management. It has made it easier for us to grow our wealth, our capital. There are full-time professional money managers who are hired to take control and take care of our money, who have the expertise, who have the experience and the authority to buy and sell and rebalance our portfolio to meet the fund's objective. The requirement to select and purchase the right stock, rebalance it on a regular basis, keep the portfolio risk to a level, all of this is done by the manager, the fund manager. If you don't know investing, if you are terrified about the finances, if you don't like the numbers, don't worry, you can still invest. You can still invest and capitalize on the economic growth of your country without even knowing anything about what's going around. Isn't that a big headache taken off? It is. Number 2, the risk diversification. Buying shares in a mutual fund is an easy way of diversifying your portfolio amongst national, international stocks, gold, bonds, and other asset classes. This helps spreading the risk to a huge variety of investment vehicles. This is an advantage because when a stock in a particular fund experiences a resistance, the other stocks in the portfolio can come to its rescue. If a particular stock or if a particular value of the stock decreases in a portfolio, the other stocks in the same portfolio may not be hampered in a similar manner, or it may happen that it might give a cushioning effect and push the depreciation ahead, or it might happen that the other stocks may grow in value and nullify the dip that has happened on these particular areas. They balance out and you don't get to see your portfolio value going down drastically. Isn't that a peaceful night's sleep? Isn't it? Number 3, affordability. They are affordable because of their low cost. Now, if you try to clone a mutual fund and buy all those stocks and mimic the same in your Demat account, it can be pathetic, it can be time consuming, and it can be expensive as well. Why? Because even with the discount brokers, there is a per script selling charges on a DP. So if there are 14-15 different stocks which you're trying to mimic in a mutual fund, even with the discount brokers, every script that you sell off would incur a DP exit charges every time. On the contrast, all that you pay a mutual fund is the expense ratio, which is at times way below 0.5% of your entire total portfolio value. No matter how many times the script is bought and sold in a particular year, all you pay is that particular expense ratio, 0.5, 0.6, 0.8, 0.9, whatever it is. It's only and only because of the huge economy of scale that the mutual fund industry works on. And that's the reason why they are able to do it at such a low cost for the investors. And this expense ratio is all that the fund house or the AMC takes from the investor in terms of fees. And for the most common and the best mutual funds available out there, it's almost always less than 1% for the direct fund. That's a pocket-friendly recipe for investing. Don't you think so? Number 4, liquidity. Unlike other asset classes like the real estates, mutual funds have liquidity. They can buy and sell units at will because there is always a massive number of users available to purchase it. There is always a buyer for the units that you're selling. And this makes it very important because at the time of your requirement, all you need to do is just redeem your investments. That's it. You have easy access to your money whenever you need it. However, it's always advisable to continue investing and keep your money invested in the fund for a very long time, as long as possible. This would eventually help in getting the compound effect. Breaking a SIP or stopping a SIP is not advised because it hampers the compounding effect of the fund. Also, it may delay in reaching your desired goals. Unless, of course, you are selling it off to rebalance your portfolio. That is allowed, but otherwise, refrain from selling them. Isn't it amazing? It's not like an FD where the money is locked in for a certain period of time. It's also not like real estate where finding a buyer is really very difficult. Number 5, regulations. Mutual funds are regulated by the financial bodies, the regulated financial bodies like the SEBI under the SEBI Act 1996. SEBI has laid down stringent rules for the AMCs to mention to their investors. These are to provide transparency for the investors, to protect them, to provide with a fair valuation of their products. So there is a governing body. There is a governing body who is keeping an eye on your investments too. No AMC does have a free will to do anything and everything that they want with your money. They cannot do it now. Isn't that a great relief? Your money is under watch. Number 6, tax benefits. Investments in ELSs are eligible for tax benefits of around 1.5 lakhs every year. Also, mutual funds, when held for a longer period of time, they incur less taxes. You get a 14, 15, 18, 20, 25%, 30% CAGR returns on a mutual fund, and you pay around 12.5% on taxes over and above 1.25 lakhs. Isn't that huge? If you were to earn this amount of money from your salary, from your business, you would have been taxed at around 30-35%. You escaped this route by paying just a mere 12.5%. Isn't that great? Is there any other investment opportunity available as of today that gives such a peace of mind, such great relief, such good returns, such liquidity, all at a very mere cost of less than 1% of your portfolio? I'm not aware of any as such. So why not capitalize on such a wonderful opportunity when it's there, available for you? Click here, check out what you need to do next. As of this video, adios.